Good day, my name is Juanita Steenekamp and I'm a project director at SAICA. I'd like to welcome you today with our discussion with Uli Schäckermann on a new standard that's been included in the SAICA Code of Professional Conduct with effect from the 15th of July 2017. The standard is called Responding to Non-Compliance with Laws and Regulations. Uli Schäckermann has joined me. He's a member of the SAICA Ethics Committee. He also runs his own company called Consultus Professional Services, and he has been involved in the ethical sphere for quite a while. Uli, let's start with saying, what is NOCLAR?
NOCLAR has been, is going to be a requirement, as you indicated, from the 15th of July of this year for all professional accountants worldwide. It's not a South African situation, it's a worldwide situation. It's been in the making for a number of years. It started in major discussions internationally since about 2012, so we're now in the 5th year of preparing for this particular requirement to be finalized. And it has really started out of the need from pressure from regulators, needs for a pressure from government bodies, from stock exchanges, from investment houses, who all wanted the auditor to take more responsibility and be more aware and effectively deal when there is a case of non-compliance with laws and regulations. Too frequently it appeared that auditors were either ignoring it or actually resigned from the assignment just because of a major conflict, major non-compliance, and everybody feels, all these institutions that approached IFAC felt that it was requisite that the auditor should deal with these matters in an appropriate manner. And the code then set, or the requirements setting out what the various players inside the profession need to do when they're experience or find out about a non-compliance, an actual non-compliance, or a suspected non-compliance with rules, with laws and regulations.
Okay. Uli, now IESBA, International Ethics Standards Board, for them to actually include this in the Code of Conduct, is that not a bit extreme?
Well, you see, the pressure was internationally was very much there to do something that the auditors need to do, also recognizing the auditor's responsibility to act in the public interest, which is clearly one of the most fundamental approaches as well in the code. It is in the code since 2005. Chapter 100.01 is the one that states that the profession has recognized this responsibility. So that was the approach to take, and then the pressure that I explained previously already, the pressure that was brought to bear. It wasn't taken lightly. It was also required in terms of creating a more level playing field in the world, because there are many countries that already have legislation, like South Africa, in terms of reporting as auditor. We in South Africa have got Section 45 of the Auditing Professions Act, which requires a registered auditor, who's also a chartered accountant, of course, to report reportable irregularities to the IRBA. Now, this code takes us a bit further. This part of the code takes that a bit further. So it requires this not only in terms of financial statements, it requires, in terms of audit, it requires that in all other matters that have an effect on the financial statements, on the disclosure in the financial statements going forward.
Okay. Uli, you've mentioned the auditor, but of course it's also applicable to the other spheres of accountants as well.
That is quite correct. The code has two sections to it, or that part of the code has two sections to it. By the way, it is part of the code, and the whole of the code applies to this as much as the individual wording in the section applies. We've got section 225, which deals with the public accountants in practice, PAIP, and we've got section 360, which deals with the public accountant in business, a PAIB. They are both covered by NOCLAR, by the provisions of NOCLAR. So we need to see what the different stages of the different players are in relation to this particular code. And we can start with the auditors under 225 maybe, where the code requires the auditor to use a conceptual framework in respect of actual confirmed contravention or non-compliance with laws and regulations or suspected laws and regulations. And it requires the professional accountant to investigate the matter, address the matter, and then finally see what further steps need to be taken. Now, there may be a requirement to deal with also, to understand this in terms of your integrity as your fundamental principles, because you just can no longer not just ignore it. You have to deal with it because it falls part of your professional behavior or under your integrity. So there, your original fundamental principles that we spoke in the code are now applicable to here, and you need to deal with that through the conceptual framework. But the approach you take in order to identify non-compliance is also done within the scope of the conceptual framework, and I mentioned the steps earlier on.
Thank you, Uli. We've spoken about the auditor's responsibility, but what about the accountants in business?
Well, the accountants, as we set up previously, the accountants also in business also have a responsibility to comply with NOCLA, which is set out in Section 360. Now, again, within the profession, within the accountants, professional accountants, there are two categories. There are those that are the senior accountants and those that are junior accountants, but they both need to be CAs to be affected by the code. And the senior accountant, when identifying a suspected or an actual non-compliance, needs to firstly discuss how to approach this with his immediate superior, or if the superior is involved, with the next person above that superior, if there is anybody. They then decide what the step would be in order to engage with management or to engage with those charged with governance where there is a body that complies with the requirements for those charged with governance. And then they're setting out as an information to management what can be done to remediate the situation, to alleviate all the kind of problems, to stop this process from continuing in the future, in other words, reduce risk on future non-compliance, and then also if the compliance is any suspected non-compliance, that we can then just stop the non-compliance from actually occurring, and then taking up the public interest matter. If there are further matters to deal with, then deal with it in the public interest, and then alternatively, or on top of it, consider whether that matter needs to be reported to any other authority. Now, careful here, because if you step outside the code of conduct under confidentiality, you may find yourself being attacked for breach of confidentiality. So make sure that you understand that you've just really documented your reporting to other authorities, and there's an absolute need to do that, or you find it in the public interest that you're reporting to the public authority in that matter. So that becomes a bit complex at that stage. Now, the junior accountant has got a relatively simple function. He goes to the senior accountant and tells the senior accountant what has been going on, unless the senior accountant himself was involved or herself was involved when he needs to go to the next superior person in the organization. The junior accountant also has a public interest responsibility that he may decide, be careful here, he may decide or she may decide to report the matter to a public authority. But again, there needs to be consideration of the conflict, of the confidentiality requirements in the code. And then let's just see, when is there actually a non-compliance of the code? And that applies to the auditor as much as to the accountants in business. Well, we're not dealing with every single non-compliance with every single law in South Africa or in the worldwide. We're dealing with those non-compliance that would have an effect, a material effect, on disclosures in the financial statements. So it would relate to either an item number stated in the financial statements or just general disclosures in financial statements. So particularly now when we're talking about the wider reporting, the integrated reporting, there may be matters coming up in the integrated report which may indicate a non-compliance. So there the auditor may have to then sit down and make a judgment as to whether he considers that to be a material non-compliance. It also is not a non-compliance if you are dealing with third parties. So if your client asks you to do some work at a third party, like a due diligence or something like that, and you discover a non-compliance at the client that is where the due diligence is done, you don't have to report that either. And also we spoke about materiality, and the last one is personal misbehavior is not part of the non-compliance requirements. So I think that gives you a reasonable picture as to what is non-compliance. The laws covered by non-compliance are laws regarding bribery and corruption, security laws, data protection laws, health and safety regulations and laws. There are a huge number of different laws that are applicable, and there is no special knowledge of you to have on those laws, but you certainly expect to have the requisite knowledge in order to be able to do the work in terms of the standards required of an auditor or an accountant.
Yes. So Uli, are you, as the accountant in business or the auditor, are you expected to go and find this non-compliance?
Now, there's no express expectation to find these things. You are not a policeman, you are not a forensic auditor that is being setting out to find these non-compliances. That is not intended with this. It is intended when it comes across in your normal work that you provide for the client. So if you do an audit and you come across doing your audit process, in terms of ISO 250, for example, there is a requirement that you as auditor understand the laws and regulations surrounding that client, in that client's environment, in that client's industry. Now, you do not have to know, when you do a mining audit, know everything about the mining laws, but you have to have some kind of understanding of these. And it applies to other industries as well. So within that generally expected knowledge, and you find there, those are the non-compliance that you need to deal with. If they are going much deeper and require special advice, you may want to consult with a legal or with a specialist, a subject matter specialist, in order to make your determination, make your judgment in the matter. And so as well in the employment environment, the employment environment covers those chartered accountants employed by auditors as well as chartered accountants employed in business. Again, there is no a forensic need to inquire, or for inquiry. There is only the general knowledge, much similar to the auditor, that one expects an accountant to have about a business, its legal environment, its legal environments, and it does not go beyond that. Otherwise, you have to go and get specialist advice.
Well, with my discussions with members so far on the standard, one of the biggest issues that they have is or problems that they have is this disclosure obligation. Can we maybe just clarify that you don't have to disclose everything or every time, it's just part of the process?
Yeah. There is no immediate reporting requirement at all. The auditor needs to deal with that non-compliance in terms of speaking to management, getting management to alert management about the non-compliance and get management to remediate the situation and prevent future occurrences, and also, if it's a suspected non-compliance, to make sure that that non-compliance isn't then actually materializing. So that's the kind of warning mechanism. Then the auditor can go, if there is advice, if there is those charged with governance, if that body exists like an audit committee, and these matters can be reported to those as well, being discussed, but at that stage there's no reporting requirement. The reporting requirement only starts when these bodies do not act as is expected by the auditor or by the law that is being infringed upon. So there is no positive immediate duty. There's only a duty when the auditor is satisfied that there is a duty in the public interest to report this matter, rather than if there is just a feeling that it would be nice to report this matter. Of course, there is no exception to this if the law requires a matter to be reported to a particular institution or governmental body. So, and that much applies to the same for the auditor, for the accountant in business. Much the same application. No immediate reporting, just reporting in terms of the public interest aspect of the NOCLA.
Mm-hmm. Are you aware of any other guidance that's been issued by the ISBA, perhaps?
ISBA has got frequently asked questions already on their website, which can be downloaded. There are quite a huge number of questions already there available. I'm aware that SAICA is also planning to put further further frequently asked questions onto their website, so there should be no need to worry too much about the implementation of NOCLA. On the 15th of July, there is sufficient information available in the various websites so that the chartered accountant and the auditor can find information that they need in order to comply with the requirements.
Okay. Thank you, Uli. To the members out there, please take note that NOCLA is one of the most important changes to the code that is happening this year, and we will keep you informed. Thank you.